Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. We are talking about mileage. Okay, I think I'm going to have to talk about mileage twice a year at least. Okay, I feel like I just did this, but you know what? It's time to do it again because there is still foolishness and mayhem going out on these streets, these internet streets about mileage. So we're gonna talk about it. Okay. So for mileage, there's two ways to deduct mileage. Okay. Your business mileage, it's also called the business use of vehicle, business mileage. Two ways to deduct. You have actual expenses and you have the standard mileage deduction. Now, the standard mileage deduction for 2019 is 58 cents a mile. That is up about 3.5 cents from 2018. And the mileage usually, it can change yearly. So it might be 58 cents a mile for 2019, 2020. It can go up, it can go down. So just know that it does fluctuate generally on an annual basis. Okay. So 58 cents a mile. Now, in that 58 cents a mile, there's part of it that's the mileage deduction and part of it that is actually accounts for depreciation. Now, then there is the actual expenses. Now, the actual expenses, it's a lot. Okay. So I got my list over here so I don't forget anything. So you can deduct oil, gas, tires, repairs, insurance, depreciation, registration, licenses, and interest expense on a car loan, not car payments, the interest on the expense. And that is in proportion to your business miles over your total miles. So if you drive, 12,000 miles a year, and then you only drive 1,200 miles for business, then you can only deduct 10% of those expenses. Now, I guess one of the confusing things that I see is that people think you can take the standard deduction, your 58 cents a mile, and then add these other things to it. No, you cannot. The only thing that you can add to your standard mileage deduction is parking and tolls. Okay, so you can't take the 58 cents a mile and then add in your insurance and your registration and all that. That's not how it works. All of that is wrapped up in that 58 cents a mile. Now, a lot of people take the standard mileage deduction just because it's easier, right? Instead of trying to keep up with every time you get gas, every time you get an oil change, every time you get your tires rotated and have some major expense or whatever. It's usually more difficult to keep up with that stuff. And so a lot of times people just use the standard deduction. However, you still have to document your mileage. You still have to document your beginning of the year mileage, your end of the year mileage, and then what are your business miles. Now, another fallacy that is going around is about advertising on your vehicle. Okay. Advertising on your vehicle does not automatically make all of your miles tax deductible. I had a consult with someone who says, hey, my spouse drives for my business. And I said, oh, really? What does your spouse do? Well, she drives the vehicle to work and it has my business on it. Like, no, no, that is not right. So it is not that you advertise on your vehicle that makes your mileage deductible. It is the purpose of the trip. It has to be a business purpose. The cost that you pay for said advertising, whether it is a magnet, if it's a sticker, if you shrink wrap your whole car or paint it in your entire car in your business, you're advertising your business, you can do all of that. The cost of getting that done is tax deductible, but that does not make the mileage tax deductible. It's got to be the purpose of the trip. So a business purpose may be going to meet customers and clients, going to meet your tax professional or an attorney, delivering products to your clients, something like that is a business purpose, not just because you got a sticker on or a magnet on your car and you just want to go drive around town. Absolutely not. Now, does that get more eyeballs? Absolutely. But that does not make a business trip. No. So just, just to clear that up. Also, I also want to talk about, employees, because this is something with tax reform that has really hurt a lot of employees who may be in like a service industry, like sales or even plumbing or something like that. It used to be that employees could deduct this business mileage. Employees can't do that anymore. So your employer has to reimburse you. And then if your employer doesn't reimburse you, it's a loss. And that has, I've heard the horror stories of people who really do drive a lot for their job, but hey, that's the tax law change. You can't deduct that anymore as an employee, but as a business owner, you absolutely can do that, but you have to document your miles. And this is where we fail so often, is in documenting the miles. As a matter of fact, like when you do get audited, that's one of the first places that the IRS goes, is to the mileage, because if you didn't document it, it didn't happen. So, and it's one of the highest paying deductions, 58 cents a mile. So you think about that. You drive 2 miles, then, for your business, then you have a little over $1 in deductions, right? So, but if you don't document it and you can't prove that those miles happen, guess what? Gone out the window. And so you can document, you can use pen and paper. If you don't have a lot of miles, then pen and paper is just fine. Like, I don't have a lot of miles, so I have an Excel spreadsheet for my mileage. Now, if you are somebody who drives a lot for your business, then you can definitely get an app. There's plenty of apps out there that you can track your mileage. You have to go through and designate if it's business or personal, but at least that's something to help you keep track of your mileage. And you really need to reconcile that weekly. Okay, especially if you do a lot of driving, to make sure you got your business miles marked business, your personal miles marked personal, and that's it. Okay, if you wait until the end of the year, you have absolutely no clue. Like, I can't remember, last week driving, and, folks try to get this done in a year. Doesn't work like that. Do that weekly so that you don't miss anything, because the miles that you don't document is money that you're leaving on the table, and you don't want to do that. The other thing I want to clear up is that the government does not pay you to drive your car for your business. It is a mileage deduction. It is a deduction from your expenses. And I want to make this clear, because what I've seen happen is that people will be in a home business and then just go drive all over creation, and you haven't made any money. Now, if you in the first couple years and you're out there trying to hustle, make it work, absolutely fine. But if you are continually doing this because you heard the government pays you to drive, then you are inviting an audit. Okay. And if you don't have things to support that driving, so it's not like you can just say, I'm just going to go drive up and down the street, 5 times and, rack up some miles for my business. No, it's still got to have a business purpose. And if you are, and they look at this stuff industry wide. Okay. So it's not like they look at you and say, oh, well, you had 30,000 miles this year. No, they're looking industry wide, going, okay, majority of people have like 10 to 12,000 miles, and here you are with 30. What is going on here? So it's not that you just, and I know because the IRS takes a little bit of time to get to get to you. So you think, okay, everything is cool. But no, trust and believe they are looking at an industry standard to go, hey, this seems a little out of whack. There's something that might be going on here. And so then that's when you start getting letters saying, hey, we like to see more information about these miles. Okay, so that's how it works. And I have a question. I want to answer it because it is relevant. It says, I often rent a vehicle if I am traveling a long distance. It's cheaper than driving my big truck. Is that tax deductible? Yes, if you are renting a vehicle for a business purpose. Okay. Now, let's say, for instance, that you rent a car and you're going to meet a client, or you're going to an event, right? Let's say you're going to an event and you decide to stay a couple extra days, right? Then only the portion of that rental that is tied to your business is tax deductible. Okay, so you can't say, okay, I'm going to have a conference for 2 days, but I'm staying 7 days, and you're racking up 7 days of car rental fees, and you really only did 2 days worth of business. So it's still in proportion to what you use it for your business. And that whole thing goes into travel. Okay. So, so when you travel, you rent a car, you got to fill it up with gas. You might have to pay for parking and tolls, or even if you go to the airport, you might have to pay for tolls. That is a part of your travel. That is absolutely tax deductible. But again, it's in proportion to, it's in proportion to what you're doing for business as personal. So I hope that answers your questions. So, but yeah, you guys, mileage is it's a big deduction. And as a business owner, this is not where you want to leave money on the table, but you have to be detailed in your documentation for this mileage. Okay. It's not enough to just go guess. Now, if you are in a situation, let's say, because I was just talking about people that were impacted by Hurricane Michael. There were businesses that lost their records, and you might have to try to recreate some stuff. You do that to the best of your ability. But on a regular day, you need to make sure that you document your mileage to the T. Because, a spreadsheet that says on February 28th, I went to this meeting with this client at this time. We discussed this. And then, it came back home. That is more proof than I think I drove about 15 miles. So you got to be detailed in how you track this mileage and you track these expenses. It's not enough just to guess. Okay. No, we're not guessing. Business owners, we don't guess. Okay. You guess when your stuff is destroyed. We don't guess just on a regular day. You got to write the stuff down. You got to document the stuff so that in the event that you do get audited, you can just give them whatever they're asking for. And I say this all the time. If you treat your business records, if you treat your tax return like you're going to get audited tomorrow, you'll be just fine. Because you know that you're going to have to detail this information. And if you establish the habit when you get started in business, when you boss out, this will not be an issue. Okay, so that's it, you guys. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we are here Monday through Friday, 9 o'clock-ish. And if you have not booked your complimentary 15-minute consultation, you can do so right here at www.homebiztaxchat.com. All right, thank you guys. See you next time. Bye.